Welcome, everybody, to the Daily Market Commentary. It's our Friday edition as we have come to the end of a very long week. I'd like to have the Good Friday music, but apparently you're not supposed to do that. There's copyright problems with that. So I know a lot of people said, "Hey, where's the cool Friday music?" Well, it's cool because somebody else, somebody else already claimed it. So that's why I don't have it. So hope everybody has an amazing day. And yesterday was a good trading day for you. For those of you new to the channel, do me a favor, click the subscribe button down below to make sure that you get the daily updates. For those of you that are not new to the channel and watch this thing every day, do me a favor, tell a friend about it, huh? I'd like to see how many subscribers we can get this thing up to, and share it with your buddies as you are in the trading world. So let's go ahead and dive right in. Looking at the S&P, yesterday I talked about a couple of potential breakouts, and we talked about one in crude oil, we talked about one in the Nasdaq, and I put a tweet up last night that the breakouts were going meh, and that's kind of what they've still been doing, a lot of meh. So you may have taken some profits on some of those breakouts already. Same thing with our move in the 10-year note. So let's go ahead and look at each of those. Now the the S&P, we put a potential breakout line up here. It's not yet broken out. So the S&P has not followed along with the movement that the Nasdaq has had. I will tell you, this makes me feel pretty bearish about today. You know, if we go back to the last, I think it's 3 Fridays, we've basically had a bloodbath in the afternoon every Friday. And so I'm not saying we're going to have that today, but I'm also not confident that it's gonna pop up super high. So if you're in these breakouts and then the Nasdaq breakout once again, meh, it's kind of what it's doing. You got a little bit of profit. It has moved a little bit your way, but it's not really getting us a huge move. And so I would be a bit concerned about price, falling and really having that end of the day sell off. If you go back to our last couple of Fridays, we had this one here at the very end of the week. We had this one the week prior, and we had where was our prior? There we go. And we had this one the week prior to that, and we had this one the week prior to that. So what you can see is very, very quickly and very, very clearly. Oops, wrong date there. What we're getting at the end of each week, right? Big move down, big move down, big move down, big move down. And that's not a coincidence, right? There's fool me once, shame on me, fool me twice, shame on you. So if you're still in these long positions at the end of the day, I'm not going to say get out of them. Certainly it's your own risk tolerance and what you're willing to do. But I'm just saying that this is the evidence that we've seen for the last 4 weeks in a row. I'd be perfectly happy with us breaking this continual cycle that we've had here at the end of the weeks, but we haven't seen it yet. And so just kind of keep that in mind, that each Friday for the last 4, we've had that pretty strong down move. Actually, although I think I highlighted the Sunday one here, the Friday one would have been this one right here. So yeah, this was the Sunday breakdown. But anyway, my point is just keep in line with those Friday movements that we could get today. And if we do, I would put that breakdown right below 66.25 in the Nasdaq. You've got a little bit of a fair price value area right here, which would be where our stop loss is if you took the long anyway. And so I'm going to remove this breakout line, knowing that our breakout did already occur and could still keep rolling. I will tell you, me personally, I'm not holding anything over the weekend. I'm just not doing it. I don't feel like there's enough. There's more volatility out there than I'm comfortable with holding something over the weekend at this point. Looking at crude oil, so crude oil, we had our breakout. Remember, our stop's got to go below this pivot. So far after our breakout, we've gone meh. And we're basically right now right back to where we started from the breakout. So you may have taken some profit. You may, depending on how tightly you place your stop. Now, if you're following your rules, your stop has to go below the last pivot low. So you should not have been stopped out. But depending on how you manage your positions, you may have been stopped out. You may have taken some profits. You may still be in it while it's going meh. Just keep in mind some of the areas of opportunity. I do have to get rid of this line, though, since we've already done the breakout. So that one is now gone in our trades. Looking at gold. So gold, we have a breakout down below this area in here. Gold's been a tough one this week, as it seems like I've put 2 gold trades on, and both of them have been stopped out this week. Which, by the way, I love my stops. I love my stops. I love my stops. Never complain about getting stopped out. Because a stop out is not a bad thing. It's really just making sure that you are managing your capital. Right now, there could be a decent range up here for a potential reversal if price does come back up into here. I'm not going to highlight it. I don't love the time of the day that this was created. Stuff that's created around 6 p.m. I mean, really, what institutional traders are moving the markets at 6 p.m.? It's just not a very huge trading period, part of the day. There may be a bit of a reversal that comes into play right here. This is right around the London Open. So what I will do is highlight this little area here. Now I'm going to do this with the dashed line because this is right around the London Open, and I do pay attention to that time of the day for a potential reversal that will also act as resistance in the past. So this area, this 1350, and there's a whole round number resistance up there at 1350 that we'll keep in play. Looking at the bond market. So the bond markets, we had our rally out of our potential buy area, and it rallied back up to our closest our closest fair price value area, which was right here. So this one technically gave us a little bit of a move and then hit the fair price value area, and it has come back down. So we need to remove this area. If you took a little that was only set for about a 1-to-1 profit. Ideally, I would have liked to have seen it make it to here. Was unable to do so, but I'm going to use that area up there as our next reversal point. I don't know if we're going to get there or not. Now, we may, for those of you that took the long, maybe took a little profit off of it. Some of you maybe have taken the long and are still at a break even. Maybe you're still in the thing. We may get a breakdown out of this area right here. So we could get a breakdown out of this area here. We still have this line from, let me remove this one. This line, which goes all the way back. Let me move this to a 4-hour chart. This line that goes all the way back, where we had gotten a little touch below here, and then it popped above. So this was definitely a little shakeout, fake out, breakout. But this line does still exist and something to still pay attention to. But we've really just been basing, right? And once again, we call this tough sledding. This is the tough sledding kind of market. The Aussie. So our breakout in the Aussie is continuing its run. And this is why I'm okay with taking a few small stop losses in gold. Because if you can get one of these runners, then all of a sudden, what does it do to your little stop out in gold? As long as you can hold on to these runners. Now, yesterday we talked about taking your stop and moving it up, taking your stop and moving it up, taking your stop and moving it up. So your stop right now, you want to be managing this position and move that stop up to lock in some profits. The euro, we are not anywhere near any of our reversal areas in the euro. Nothing really sticks out for me to be willing to jump in on. We got this area down here, but I'm going to leave this area be. I think that would be kind of forcing it a little bit. It doesn't really fit my ideal pattern because it's already been touched one time through there. And then the Canadian dollar, we still have an area down here that we have just been unable to return back to this area. But we are putting in what could be a potential breakout up here. And the reason that could be a potential breakout is because we're getting slightly higher swing highs. So I'm going to put this breakout line in here. For those of you that are trading the Canadian dollar, I think you may get a little move out of that right there. Great British Pound, Japanese Yen, our other two currencies. We had, there we go. So our Japanese Yen breakdown has occurred from yesterday's DMC, and it's continuing to move down. Now, your stop originally would have been above this pivot. I would take your stop now and move it down to about this region here, which would minimize that loss. So our Japanese yen trade is moving. It's running off of the breakdown from here. Great British Pound. The Great British Pound position, we had this breakdown way down here. We don't really have any stopping points up above us, even on the 4-hour chart. Heck, even if I go to the daily chart, we've got nothing really up above us. I've got to go all the way out to the weekly to kind of see where that's going to be. And when I go all the way out to the weekly, I'm coming way back here back to the June. What is that? That's the week of June from a couple of years ago. And if I'm not mistaken, this was the Brexit. If I remember my dates correctly, so we're almost back to pre-Brexit positioning in the Great British Pound as we see the weakness in the dollar. But this trend line has just been continuing to march higher and higher, and I think that there's a strong argument that we could continue to go higher in the pound going forward on a big picture perspective. Nothing really to add for nat gas or copper as we have this set up right now. So that is what we're looking at for the week. Remember to maintain your positions, maintain your rules over the weekend about holding positions. You decide it on it. Remember, this is only for educational purposes, and so you need to make your own decisions about your risk and the positions that you look at. But if you have any questions or anything I can do for you, please feel free to reach out. My email address is chuck@iiefinancial.com. Thank you so much for your time, and I will see you on the Sunday night weekend edition. Peace out, everybody. Have a good night.